Thank you for taking the time to watch this brief webinar section about solo 401k plans. This portion is entitled 401k Plans for the Solopreneur. And yes, an entrepreneur or small business person with no employees can, yes, have in fact a 401k plan, just like Boeing's plan or Google's plan or Microsoft's plan, yes. The difference, well, there's only one participant, that being the owner. Let me take a brief moment to talk about myself just for a little bit in our firm. My name is Kenner French. I'm with vastsolutionsgroup.com. We do tax, finance, and artificial intelligence to help entrepreneurs lower tax and prepare for retirement. We have clients all over the country. We've been around for over 50 years. We work with sole practitioners in many cases, and if that's you, you're our type of client. You know, the one participant 401k plan is not new whatsoever. It's a traditional 401k plan covering only one employee. The plans have the same rules and same requirements as basically any other 401k plan. The surging interest in these plans is basically as a result of the extra tax law change that became effective, at the beginning of the 2002. The law changed how salary deferrals are calculated now with respect to 401k plans. This change created an opportunity for some people to put away additional amounts towards their retirement. The marketing of this type of plan is aimed at business owners who really don't have any employees other than themselves and or maybe a partner and or a spouse. Many of the advantages stressed by marketers of these plans vanish if the employer expands the business and hires more employees. That's an issue. No matter what the plan is called, it must meet the same exact rules of the IRS code in any way. If employees are hired and they meet the eligibility requirements of the plan and the code, they must be included no matter what. Under prior law, the employer profit sharing and matching contributions were combined with the employee deferral when determining the maximum amount of the deduction, which is 25% of employees' compensation. Now, since the tax law changed, the employee deferrals are removed from the deduction limit calculation. Only the employer contributions are limited to less than or equal to 25% of the employee's compensation. The employee deferrals can be made in addition to the employer contribution. Every year, the government dictates maximums that can be deferred into a 401k, and generally it's around $19,000, depending on the year, $20,000. If an employee is aged 50 or older, another 25% more can be put in. The extra amount is called a catch-up contribution. These deferrals can be either pre-tax or, if the plan allows, after-tax contribution. The after-tax deferrals are known as designated Roth contributions. We've been asked by many people if a participant can defer maximums into both. The answer to that is decidedly no. There's one limit per person for all types of elective deferrals. However, the limit can be split into any ratio between the Roth and the pre-tax elective deferrals. Another question that we often hear is are salary deferrals made when the person is self-employed or involved in a partnership? This person doesn't usually know for certain what their income will be until the end of the year, or maybe even later. The final 401k regulations address this issue. The regulations state that a partner's or self-employed person's income is deemed available to them on the last day of the taxable year. And since an employee must have a deferral election in place before compensation is available, a self-employed person may not make a cash or deferred election with respect to compensation for a partnership or sole prop after the last day of the year. If a partnership provides a cash advance payment to the partner during the taxable year, that is based on the value of the partner's services prior to the date of payment, and by the way, which do not exceed a reasonable estimate of the partner's earned income for the taxable year. The individual can defer a portion of these advances even though their final compensation has not yet been determined. Now, obviously, if the self-employed person wants to maximize their contribution, they can't do so until their final compensation has been determined. Now, that is okay as long as the election was in place as of the last day of the taxable year, the bottom line. Self-employed participants may defer against advances or draws. Keep in mind that at the end of the plan year, the deferrals must be tested as an annual addition for what's called the 415 limit. If the test fails, then the excess amounts deferred would have to be corrected. Lastly, employer contributions are not required to be made until the due date of the employer's tax return plus extensions. That's so important. So, in the case of a sole proprietor, let's say this is when the 1040 is due, October 15th. If an extension was filed, that's important again. The IRS is not promoting these types of plans, these solo 401k plans, nor is it saying they're bad in any way. It's simply suggesting that the employers use care when they're looking into any retirement arrangement to be sure the plan they decide upon is right for them, and that they're not looking at limits that apply to the plan, but also the limits that apply to themselves very specifically. Now, this webinar section was intended for people who needed true advice about preparing for retirement and also tax savings. I will ask you this. Can you think of a better way to get basically a guaranteed tax saving while putting money away for retirement? Well, a 401k is one of the best ways of enjoying both. I said you'll get a nice little bonus for attending this little section earlier. Since you did, I very much appreciate it. If you send an email to einstein@vastsolutionsgroup.com, we'll send you a copy of my book, which is entitled, as you can see, The Entrepreneur's Manifesto, a collection of smart financial advice. Now, for disclosures, call the office, 888-808-8278. Thank you for watching this section. Hopefully it was valuable to you. If not, if so, thank you very much for believing so. Check us out on the web, www.vastsolutionsgroup.com. Please don't forget to subscribe to our channel on YouTube. And also, again, if you have any questions, give us a call, 888-808-8278. It's indeed been a pleasure. Once again, Kenner French with vastsolutionsgroup.com.